Welcome back. So the equity market continues to have a good Friday morning, still up almost 100 points on the Nifty. Let's now find out what's happening in the world of commodities, where at least in the crude markets, things are still very, very nervous and edgy. Let's go back to Manisha for the latest. Manisha, over to you.
Well, thank you for that. Yes, when you look at the crude oil prices, we've seen 3% of gains in the overnight markets. It's headed for a third weekly gain into there. And then there are supports coming in from the geopolitical premium. And the markets also have seen various statements being coming out. Israel, for one, says that they are intensifying their attacks against Iran. Also, there doesn't seem to be any sign of an exit strategy coming in from either side. That is keeping the crude oil prices in good favor. But the oil rally has hit some breaks in the Asian markets right now. We are trading nearly a percentage point on the lower side. That is after Trump says that he will take a call on striking Iran in 2 weeks from now. So that adds to the uncertainty, and the markets also have gone in a bit of a profit taking in Asia because of that statement that came in last evening. Also, the prices are capped by the fact that you're looking at higher supply expectations for the second half of this year and in 2026 going forward as well. Whether it is about OPEC supplies, non-OPEC supplies, you are looking at that increasing, and that is the reason production elsewhere has offset the disruption impact that the markets believe could come in from the western part of Asia. What the brokerages are saying is quite important, and they have been reiterating, changing, revising their crude outlook in sense of prices going forward. I'll start with Citi, which says that the prices could hit 78 a barrel. We're not too far away from there. If the conflict disrupts 1.1 million barrels per day, that is of Iran exports. Iran, as of now, is exporting 1.1. But Citi also says that disruption of 3 million barrels per day could lead to prices going to $90 a barrel. They still don't believe that the prices can go to a triple digit there. So that is their worst case scenario on the higher side when it comes to crude there. JPMorgan says in an extreme scenario, if there is a closure of Strait of Hormuz, that is the only time that you will see the prices breaking triple digit and going up to $120, even $130 a barrel on the higher side. Goldman Sachs, in the meanwhile, says that the geopolitical premium already into the prices, and $10 of a war premium is what they're looking at. Once this de-escalates, you could be looking at the prices coming down yet again. Interesting report also coming in from Barclays, which says that prices can go all the way to 85 if Iran exports are cut by just about 50%. Remember, Iran is exporting 1.1 million. So half of that also, if it goes down, then the prices can go to 85. Mizuho Group, we spoke to them recently on the channel, and they said that the prices can actually look at a very big range here. $85 a barrel is their bet if there is disruption to the Iranian exports. So there are lots of ifs and buts, and the markets do not seem to be moving unless there is an actual disruption in supplies, in exports as well. But Mizuho also says that de-escalation of tensions can bring the prices down to $65 a barrel in a jiffy as well. Trading.com also has a similar range, 65 to 85, depending on what kind of a scenario do we work with. And Bank of America has actually put a long-term range as well, given the fact that you're looking at higher supplies going forward. Bank of America says that until 2030, they're looking at the prices ranging between $60 to $80. For this year, their average stands at 75 at this point in time.
All right, Manisha, thank you very much for that. So that's oil very much in focus, top of mind really from a financial market perspective.